Well, welcome those of you who are trickling in. I know you'll keep trickling in here, but welcome. I'm excited to have SG Ellison here. This will get put into a podcast. So if and it'll be on our website. So a couple of rules to guide us by here. Number one, if you want to find the replay at any time, it'll be available on our website, unbridledcapital.com, in a couple of days, probably. It'll be dubbed on our next podcast, so you can have a chance to listen to it. The podcast is The Restaurant Boiler Room. And then it's on YouTube too. And surprisingly, man, we get like several hundred people listening to it on YouTube every month. So so that must be a medium that people use, but nonetheless, we got it, I'm thankful for everybody who touches base and listens on all the different, media that we have. Usually I do a quick update, like before we get started, just about the deal market. I think Unbridled has 16 deals going right now, which would continue to represent probably a pretty significant reduction in what we've seen over the last several years. Probably at least a 30 to 40% reduction in deals, and I think that's probably emblematic of what's happening in the industry. There's a supply demand issue with selling restaurants right now. Good restaurant businesses really, aren't on the market as readily as they have been in the last couple of years. And so we had like a Taco Bell, a Wingstop, and a Burger King be on the market, each of those three in the last like 60 days or so. And they had, outsized amount of interest from buyers. And I think it's just because people have cash from ERC credits and other things and want to spend their money, but they don't have anywhere to put it. I think the deal market probably continues to stay a little bit depressed here for the next 3 to 6 months, but maybe we'll see it open back up as we get into the third and fourth quarter of 2023. So that's my quick assessment. And with that, I'd like to introduce SG Ellison. And, I've known SG for, I'd throw a year out there. It's got to be over 10 years now, right? Like, 10, 11, 12 years since you've gotten into business. And, we've personally done a couple of deals together. Really thankful for that too. And I'd love to just, have you tell your story and the story of your company. And then maybe, you're almost like an advisor type of person, even though you're a president, and you've got some great thoughts about the M&A market and financing market, and you've got a good real estate background. So I think you'll find, guys, that this webinar will be really kind of a neat mix of different areas of expertise that you can apply to what you know in this business. So welcome, SG. Tell us about yourself, brother.
Hey, Rick. Thanks for having me on. When you asked me to be on, I was thinking about that question of how long have I known you? And it is about 10 years. I started our development company about 10 years ago. And before I got into being a franchisee, I was pitching real estate sites to Taco Bell owners. And I remember being in a booth at like a franchise forum on this side of it, trying to get build-to-suit deals in a new program we had developed with Taco Bell. And you were on the other side, just starting your business at Unbridled. So when you asked me to be here, I was like, well, we both had a pretty interesting journey over the last 10 years. Yeah. We both small market guys, from a young time. and now we've got some pretty successful partners and pretty good businesses. So congratulations on what you've been able to do.
Thank you. That's really kind. And back at you. Who would have thought an old boy from Arizona would be have like this massive restaurant business, right? Like, wow. Like, I mean, all these people, it's almost like you're like a military arm or something. You're getting so large. I can imagine the all that goes into it. But tell us a little bit about it all. Like, I mean, how did it get going? How it come to this?
Well, yeah, I mean, it was, and I'm going to talk a little bit about people, and I'm usually a pretty good listener, so I don't speak a lot to people about my journey, but I'm happy to do it here, and hopefully it resonates with some folks. But I'm actually calling in from Maui, not technically on R&R trip, but here to celebrate Taco Bell and some of Diversified Restaurant Group's team members. We have the Golden Bell Awards here in Maui this week. And we were fortunate enough to have 8 Golden Bell winners at DRG of Taco Bell. And the Golden Bell is essentially given to the top 100 general managers across the system. I think now they've expanded it to international, so there might be a few more here. This is the most that we've had in our organization. We've obviously have more locations now, so that, relatively speaking, on a pro rata basis, you would expect it to increase. But I think we have at 300 stores, which we just opened our 300th location in Kansas City 2 months ago, and we've been celebrating that for Taco Bell. But out of 300, we're probably 3.5% to 4% of the total store count in the U.S. So to have essentially 8% of the winners, we're kind of out kicking our coverage there, and that's a testament to Todd Kelly and Tom Douglas and all the GMs that have put a lot of work into this, and our directors. And it's really fired me up. This morning they had a 6 a.m. business review for the GMs, and I wasn't actually planning on being there, but the time zones, I was up pretty early, walked around, got to go in and see what they were doing, and I got to meet a guy named Justin Patton. Justin was an interesting story because he was a school teacher. My parents were school teachers. And so that was really interesting to me. And he went through and joined Taco Bell, eventually Yum Brands, as a trainer. And training is sort of like teaching, and started to really, talk about how to make stores and grow leaders. And one of the things I was reading, and he has a book, and it was about trust. And the question he posed in the book was, is trust given or earned? And about 70% of the respondents will say trust is earned, right? And so, that is something that people kind of think. And he tends to go to the other side and say, well, it's you got to give trust to see if somebody can earn it back. And he really kind of comes together with this thing that trust is built. So it's really a balance of two of both sides of this. And that's really sort of what our business is, and that's what kind of got us going in the Taco Bell and real estate world. Is you got to kind of trust who your partners are. I'm fortunate to have great partners, and David Grieve helped me, start the company back 10 years ago, and we've sort of built this company and this team based upon that value of trust.
That's great. That's great. And congrats to all those winners. I mean, as I think about you guys started off as real estate guys, right? Tell me a little bit about that, and then kind of how did you move into restaurant operations? I mean, it's you guys are kind of at the forefront of it. People who listen and tune in hear me talk about like 2013, 14, and 15. You started seeing this migration and move to a different type of franchisee. Some of them were private equity and family office groups out in New York, let's say. Young, raising money, buying assets, and others kind of came from the real estate side, kind of then saw, gee, this real estate thing is doing pretty well, and we love the businesses on top of them, and we want to be a franchisee. And that's kind of the way you guys came at it, really, I think. So tell us a little bit about that, if you don't mind.
Well, yeah, I mean, you sort of asked me, earlier in the week, how did I start, and why real estate and restaurants, and I was kind of thinking about that question, and you try to go back to, your childhood and say, why am I doing what I'm doing now? Was there any sort of influence? And all I can remember is I really like playing in the dirt. My parents both worked really, really hard. His mother was a school teacher. Her father was a miner and then became a school teacher. So I was at home quite a bit. And, back in the early 80s, we didn't have, a lot to keep us entertained. So I'd get a stick and just sort of, build my own Sim City out there in the dirt and try to, have an imagination around that. And ultimately, I like food. So that's why I'm in the restaurant business. But those two things, built upon each other. I ended up going to, Arizona State. I loved buildings, so I emphasized in structural engineering with a civil background. Did you get a civil engineering degree?
I did, man. I did actually from ocean engineering from the Naval Academy, but I ended up, which is a portion of civil engineering. So yeah. Totally.
Yeah. I remember us chatting about that. But so I ended up, going into sort of structural engineering. I was pretty good at math. Didn't read a lot of big books. I'm sort of semi dyslexic here, so it takes me a little bit longer to get through some of that. But math was kind of my deal, and I thought I would be a great structural engineer and build, kind of the next Sears Tower. And I was sitting in an office one day in my first job out of college, and I was doing moment calculations, WL squared over 12 or something. And I did it about 8,000 times in a week and figured, this isn't really me. I feel like I'm a little bit more a people person. So I kind of moved on and started in the land development engineering side, worked for a company called Carter and Burgess, who's now Jacobs. And they, at that point, I started to become more of a land planner, which had a little more strategy to it, going back to that real estate side of it, right? And became a project manager for the firm, developing CVS drugstores. And at that time in 2000, there was exactly 0 CVS drugstores in the Western US. And the company I worked for out of the Northeast had been a developer for them, and they had migrated essentially out to the West as a preferred developer for CVS. So I was doing the engineering side. They ultimately needed to open an office. And right when I was going to sit for my PE exam, they asked me if I wanted to come over and help them open that office and run their entitlement and construction facilities. And so I did. And a few years later, the real estate acquisitions manager left, or director left. And instead of them hiring somebody else, I told them I could do that. So I kind of learned how to deal make through the 2000s through CVS drugstores and another company called JP Morgan Chase. We did about 50 of those locations. So I did about 350 deals, over 5, 6, 7 years with a great team, and learn, the art of negotiation, the art of, getting the right type of deal, and learn and met a lot of people. And that's how I met David Gree, was through that business. He had owned some drug stores, and that was about 10 years ago when we started First Street Development.
Okay. And then First Street Development ended up backing a Taco Bell franchisee who was acquiring some corporate stores, right, down in Southern California. And then that's how you guys got into the real estate side of Taco Bell. And then, right, presumably from there, you got into the business side of it for a while, right? Is that how it happened?
Yeah, well, close, not exactly. I mean, David was a founding partner with me in First Street Development, along with Andrew Churn and Peggy. So our intent with the development company was to take, kind of what we had learned over the last decade, and be a real estate developer. And we had some good contacts and good clients throughout the West, and so we were going to do that. But what had happened was, at around the same time, we found a handful of Taco Bell triple net deals in Los Angeles. And a good friend of mine named Mark Miller, who ran real estate for CVS, had a friend, a neighbor. His name was Brian Cox. And Brian was getting ready to leave Taco Bell. He was awarded 29 stores, him and Mark Reed, in a refranchise in 2012. And I got a chance to meet Brian, at a social event with Mark, and just started chatting about what he was going to do. And he had some potential partners that seemed like they were going to take a big chunk of the company. And so, we had talked about doing a sale leaseback on the fee-owned properties, and he can generate some of the equity, additional equity that he needed to buy the company. And he thought that was a great idea. I obviously didn't have the money to do the sale leaseback, but had been started working with David, and called David, and he was in the triple net retail business, and loved the idea of buying those properties through basically AC Ventures, the company that he started in 1992. And we went to execute that, and essentially the brand, and I think maybe GE Capital at the time, were sort of like, well, we don't want to just arb this real estate and then the real estate not be there for collateral. So we sort of need the real estate to stay in the deal for a bit. So we did like a 2 to 3 year lockout, sort of forward commitment on, okay, we'll take the real estate in 2 or 3 years. In the meantime, we'll take a limited partnership interest in in the taco making business. And we sort of convinced ourselves that that would be an interesting thing to do. And that was late 11, early 12. And I think, the brand was, kind of rebounding from some issues in the 2000s. And they came out with like one of the greatest products ever, which was the DLT.
Yeah.
And I think we got in at a pretty reasonable multiple at that time. Sales took off. We started to see some really good, returns on the equity side. And that's when John Hoffman joined us, who had kind of been in the investment banking, stockbrokers business back in the day. And so, David and John were like, this is a really good business. We should try to, stay in it. And at the time, I think we bought a 7 cap in the real estate, which today would be great. But the returns on tacos were in the double digits. So we were kind of thinking we were on the wrong side of that deal. And ultimately, Brian and Mark were able to create some value and essentially refi. And David helped with the structure, really, refiring us out. And then they got to keep the real estate. And we essentially at that time went and found in 2013, closed in 14, an opportunity to buy 75 units from Dolan Foster. Rich Lowe and Randy Rodriguez owned the company at the time with Paul Luce. And that was sort of our first step into our wholly owned franchise business. Kevin Burke, one of your frenemies at Trinity and Citizen, did a great job at helping us kind of get started with that, and has also, been really helpful over the years, like you have. And I think all you guys are really great at what you do, and I think you have, a lot of great clients, and I think that community is just pretty tight, and I think you guys do a good job. But we started then. After that, we bought 63 units in Nevada, and then we just started acquiring. And over 10 years, we've been able to accumulate, 300 restaurants. Really, in 2014, September was our first acquisition. So that's sort of how it started.
Yeah. So from September 14 till now, you've gone from basically 0 to 300 units. Quite a journey. And, I know your first acquisition was kind of, San Francisco area kind of, and then around, and then Las Vegas. And then, I was involved in helping you guys buy the Kansas City market in 2017. And then, you guys have come down to San Diego. You've gone up to, I guess we helped you, buy the Nevada market, Northern Nevada market. And,
that's right.
And so, it's been great to watch. And you guys got into a second brand too along the way, didn't you? You're also Arby's franchisees now too. And what do you think about the difference between, those brands and those franchisors? Just out of curiosity. I mean, I've been, I've said this a lot over a lot of different platforms, but like the fraternity either usually goes from Yum Brands or GE Capital. Everyone kind of has like some sort of corollary back to that starting point. But I'd love to hear your thoughts on the differences between the brands and the management teams and the franchisors and things like that.
Yeah, I mean, the difference is the major difference is just the product, right? You're dealing with two different types of product. I mean, the similarities, is good leadership, right? I mean, and what vision that Paul Brown has had when he bought Arby's and then started just to add these other franchisors together. He's created a really unique place where you have some shared services. He's trying to develop best practices across brands, and the leadership at Arby's, what Jim Taylor is doing. We've got Rita Patel now doing the marketing. They just have a lot of top line opportunity there. So that's kind of the similarity, right? Is that growth is really the mindset, but behind both brands. And when you look at sort of where the AUVs are, you say, okay, what's the AUV potential relative to the market? And when you look into a brand like Arby's and you see the types of franchisees that are coming into the brand, that really high quality, growth minded, franchisees like KBP, and obviously Flynn has a really big stake. two franchisees that have been very helpful to us, and that's really one of the things that sets us apart and really sets actually Taco Bell apart as well, is the franchisees that are in the brand. We early on, for whatever reason, they adopted us, maybe because we bought a lot of stores and they figure we better make sure these guys don't go too far afield. But I think they realize that we're willing to put capital into the business, right? And we're willing to drive investment, to drive, brand awareness and to drive revenue for us and for everybody else. And, that kind of showed through when we started to do the cantinas. We opened up one of the first cantinas when we opened in San Francisco. It was actually the first Taco Bell to have the cantina moniker. Neil and Rob had opened up a Taco Bell that became a cantina in Wicker Park. That was the first one. And then shortly thereafter, when we bought Las Vegas, that was a big hole in the Las Vegas strategy, was not having a Taco Bell on the Strip. And I had some experience on the Strip. I had built 4 CVS drugstores on the Strip. One of them way far north that wasn't very successful. But if you stay between the goalposts, you can do pretty well. And the franchisee before us said, "Well, I'm not going to do a Taco Bell on the Strip because the rent's just too high." And we realized that, it's sort of like if you build it, they'll come, and we could build a Taco Bell and maybe we'd sell a few tacos, but we really had to build a flagship. And I saw what CVS did with their first drugstore. And I think they bought the property for $18 million. It was a quarter of an acre right in front of what used to be the Monte Carlo. And they needed to do about $20 million in revenue to make the thing pencil for it to meet the pro forma. And they ended up doing that with just water and sunglasses, and I think they did, north of 40 million the first time. So, David had a lot of experience on the Strip looking at properties. I had built some. So we went to Taco Bell and said, let's do something really great. And this is what we want to do. And we weren't sure that they would go as along with us as far as we wanted to, but they really jumped in with 2 feet. They brought more than we would have ever expected. And we built this really great sort of Willy Wonka destinational, Taco Bell that really, aligns with what the brand's, about, fun and consumer mindset and keeping it young. And we've had just an amazing run with that. And have since opened 7 cantinas, all unique to their trade areas, all very successful. You'll see the Las Vegas Cantina quite a bit. You'll see Pacifica out on the beach quite a bit. And the brand has been really helpful in helping us to, maximize the potential in those assets.
For those of you who may not have maybe some of you listening or watching haven't been to a Taco Bell Cantina, it's kind of this mix between Taco Bell and, crazy nightclub. And, it's just got a really fun and edgy feel to it. And you ought to check out the one on South Las Vegas Boulevard. It's really something to behold. As a matter of fact, I seem to remember somebody was singing the Humpty Dance, there a couple of years ago. I was
hoping to bring that up and get a cameo, but maybe towards the end of the bill. But that Taco Bell, I think, helped put us on the map a little bit for folks that are willing to try some things, but also protect the brand values, right? And to care for what the folks before us have built. And I think that really helped. And when you look at Taco Bell, it's, most everyone's of a growth mindset, right? And within the brand, within the franchisees, and when I was first starting the business in real estate in like 2002, I got a chance to go to a Phoenix Open lunch. You have the lunch and there's all these people that come, and it's before the tournament, like a month before, and they usually have speakers. And Lou Holtz was there. He's, I think West Virginia guy, and he was he was an idol just from, as a college football fan. And he said, if you're not growing, you're dying, so take an inventory of your life and put it in motion and start doing some things. And I'd originally thought that was, that meant just go grow for the sake of growing, and realize that it really is about, growing people, growing emotionally, investing in things that will help people grow. And it's the people that'll grow your top line, your revenue, and it's what you invest in them that will, ultimately help you grow your company. And that's how I think we've gotten from 0 to 300. Is we've put a lot of effort into trying to build the right culture, starting with Todd and Tom and all the team that really, they really put the culture out there, and we're just trying to feed it and give them the opportunity to feed it, and they do a really good job with it.
Well, that's great. That's great. Well, I think I told you when we were doing our kind of intro here that the people who watch and listen, are kind of this interesting mix of franchisees and lenders and private equity people and franchisors and investors and all these kind of people. And so I'm just trying to think of maybe pivoting a little bit to maybe some comments that you might jump into and talk about kind of what makes like I've got 4 or 5 questions that we could ask, but maybe the first one could be like, what's the operating environment look like right now, to somebody who might be listening and isn't a franchisee and may or may not be, know what's going on. What's it like in this environment to operate a business that has 300 units? And I guess with the Arby's, I don't know how many Arby's you have, but
30, we have 30. We're opening up our 30th location in Ormsby, Nevada. If it hasn't opened yet, it'll open in the next day or two. Yeah.
That's great. Congratulations. So over 330 locations. What's going on out there? What's it like in right now?
It's very, very difficult. It's not easy, right? And again, we've only been in it for 10 years, so we haven't seen all the cycles, but I feel like we've gotten a master class in operating cycles from pre-pandemic, through pandemic, through labor crisis, through supply chain, through inflation. So we've got a pretty good education in the last handful of years of what happens. And, fortunately, we're in a brand on the larger side, like Taco Bell, that has a lot of resilience. And we call it, sort of recession resilient, if you will. We're not quite in a recession yet, but and has a lot of resources where people share best practices, and they're just one of the, they're the number one franchisor relationship the last 2 years. I think you probably read that, and they really have that sort of foundation of restless creativity that Mark King has kind of brought to the company. And when we look at, when we look at what he's done with leadership, it's the best, leadership team, that I've seen in the last decade, with bringing in, Sean Tresvant and to run the brand, Scott Nizvinsky, who's just doing an amazing job at understanding, what drives the franchisees and giving them space to drive the business. And then I was here this morning or last night, got to hear Mike Graham's motivate. When he gets in front of general managers, there's nobody better that motivate, right? And when you look at the operating business, you need the operating challenges. You need people like that can help you navigate, the challenges that are in front of us. I think, one of the things that we look at is sort of operating in California. It's a challenging environment to operate in. We just had that FAST Act sort of put into law last September. We were able to, garner enough signatures to get a referendum going and take it to the ballot in 24, which I think gives the opportunity for the franchise community and the restaurant community in general to tell the narrative of how great these jobs are and how great the opportunities they create. for people to grow in their careers, right? And so, well, it's difficult. I tend to believe that as you scale and as you build upon what your baseline is, you're able to handle a lot more of those challenges a lot better, right? And surrounding yourself with the right people that can help you handle those challenges and strategize. Mark King, I listened to Guy Raz. You're like the Guy Raz of investment banking. You know that?
I don't know Guy Raz. Is this guy crazy?
Well, yeah. I mean, he's not as crazy as you, but he's like a professional podcaster.
Okay, Guy
Raz. I haven't
Raz.
listened to him, and if the folks that are listening haven't listened to him, I find him to be super interesting. He has a podcast called Wisdom from the Top. It's probably the only podcast I listen to, and on every month or two when I have some free time or an hour. He has some really amazing people who aren't. He did the one called The Founder, or How I Built This is what it was called. So he would talk to people who built companies, and now he has one for the last couple of years called Wisdom from the Top. So it's folks that sometimes building a company from the ground up is a lot different than running sort of a large stabilized company. So you have folks like Mark King was on there recently, who obviously ran TaylorMade and Adidas, and you should listen to his story because it's really amazing from where he started in Wisconsin to running these great companies. And one of the things he says on it, I talked to him about this 2 weeks ago when we were in Florida, was he really his baseline is the Rita King rule, which was his mother, and the rule was essentially you don't need to know the answers, but you need to know how to get them right. And so he's really kind of built a team at Taco Bell that are folks that may not have done everything and have all the exact background in the restaurant business, but they do know how to get the right answers and help support the right teams. And so, that's sort of something that I've always sort of used as well. Like I walked into different industries, not knowing, a whole lot about them, but knowing that, we can figure them out. Right. And in engineering, we sort of learned that rule called Oxen's razor, where, the simplest solution is the easiest solution. So you take complex things and you kind of backpedal and you can go find the answers. When David and I were running really hard from 14 to 2020, when we started to build this restaurant company, we were still buying a lot of real estate, and our team was getting a lot bigger at the investment headquarters in Sonoma. And there was a lot of folks that were just coming in and asking for what to do on things. And similar to the Rita King rule, but different, he sort of posted a sign that just said, bring solutions. You come in with, you're going to have an issue, but just come in and say what you think you should do. And then we can sort of validate what that idea was. So I think the point of the point I'm trying to make is that the operating environment is very difficult. Unionization is something that is, a dirty word that we don't like to talk about in the business, but it's real when people are running around trying to unionize store by store, whether it's Starbucks or Chipotle. We had a strike in one of our locations at one time, but you bring in the right people to find the right answers to support the right teams, right? Unions, I think, were important at one time or in some industries, right? My father was an underground copper miner. My grandfather, my namesake SG, was an underground copper miner. My mom's dad, Demetrio Sapien, they were all underground, and they were 5,000 feet below grade with a jackhammer. That sort of environment in the 70s and 80s and in the auto industry and a lot of industries, you really needed to those folks to protect labor. Nowadays, market drives that protection. You have social media, you've got you've got news. You've got to do the right thing by your team members or employees, or you're gonna be out of bounds. And so we just have to tell that story, to the California voters. That I think they'll understand it, and then they'll understand that these if you grow wages too rapidly, that's only going to affect pricing at the end of the day, and you're going to pay more at the pump, if you will.
Yeah, on dog tacos, so to speak. Yeah, yeah. Well, this is kind of going off topic a little bit, but with all the things that you said you've learned from Taco Bell, if you were like yourself 10 years ago, and you were looking to maybe get into a brand, I mean, what like 3 things have you learned from Taco Bell that you say you'd look for in a new brand that might be smaller but growing a little bit? If you're going to be either an investor or somebody to operate it. Anything pop to mind that you might because obviously there's all kinds of ways to get into the franchising world. One is to invest in tier 1 assets and brands, and to grow through consolidation, and new growth. But there's a lot of new startup franchises out there, and I just kind of wondered how would you think about that? What learnings would you take and apply that to a new venture?
Well, I think if I knew today what I knew 10 years ago, I think I would end up kind of in the same place. It's like, do you have a category that's sort of a category killer or owns the market, right? Taco Bell, certainly its closest competitor, is not very close. Arby's is a very unique provider in their segment. There's not anybody that does exactly what they do in a drive-through format with the quality of product that they have. So I think, those 2 things are important. I think, a franchisor that has some skin in the game is important. When you look at what Taco Bell, I mean, they have almost, 500 units or 480, and they're building another, 20, 30 locations, trying to every year. And then Arby's, certainly, I mean, they have almost a third of the system. So, they're not going to make a decision that is damaging to the middle of the P&L, because they have a bulk of the middle of the P&L. So there's a real symbiotic relationship in how those decisions get made. And so I think, and just being with a group or a franchisor that, is growth minded and opportunity minded.
I think those are great answers, and I know those are off the cuff answers. The second answer to me is a really, really interesting one for those listening who are considering getting into the franchise space in some way. The model over the last 5, 6, 7, 8, 9 years has been to refranchise, and for most brands to whittle themselves down to like a 1% to 3% corporate ownership. So if they had 2,000 units, they'd only operate 20 to 50 units, and they allow franchisees to operate the rest of them. And they, over the last 7 or 8 or 9 years, have refranchised stores or sold stores to franchisees. Taco Bell and Arby's are 2 kind of sort of notable examples. Taco Bell has a lower corporate ownership, but Arby's has a pretty high corporate ownership. And then you have the other side of the fence, which is like Starbucks and Darden restaurants and, and all these over here that are almost entirely, if not entirely, corporate owned, which, corporate historically does a really poor job of operating a P&L relative to a franchisee. But the point that SG is making is that when a franchisor has a decent chunk of restaurants, they're more heavily invested in the brand success than they maybe are if they're just scraping royalties off the top of franchisees. And it's an interesting and probably really valid point. Going back to basketball being it's the Final Four, you guys have heard me say this before, like back in the 50s, they had tight shorts and socks up to their knees, right? And then you got to the 1980s and you had tight shorts and socks up to their knees. And then you got into the early 2000s and you had like baggy shorts down to their ankles, you know what I mean? You couldn't even tell if they had socks or not. And so now, like things go, it comes and goes. And, like you just see trends coming back after all these years. And, I assume that will happen at the franchisor level again. Maybe there will be a movement afoot, and there might be a movement afoot when there's a little pain and suffering maybe in the marketplace for franchisors to take hold of some assets that are in distress and actually build their corporate ownership back to a more notable or sizable level and have more skin in the game and by doing that, attract the right type of, franchisee who sees that as a partnership because they operate stores and not just franchising. That's a bigger point for another day, but I appreciate you bringing it up. It's a really interesting one for sure. What do you think about, what do you think about real estate? Tell me a little bit about real estate. You know more about real estate than almost anybody else does, SG.
I would again, you think more highly of me than first. I'm like, an NCAA Division I quarterback, and I'm now the real estate guru. But I've made some more real estate mistakes than a lot of people. But overall, we've managed to do fairly well. I think the real estate market, we've been waiting for cap rates to go up for a decade, right? And or longer. They just have been kept. They've been continuing to going down until very recently, right? So until the interest rate market has moved, substantially, where we're starting to see a little bit of cap rate degradation, right? For high quality assets like Taco Bell or long-term, high quality franchisees like Arby's, you're still able to garner a pretty good cap rate if you're looking to sell those. These are 20, 30, 40, 50-year investments that have passive cash flow and are tax, have some tax efficiencies, and so people are still really interested in those. But the days of getting a sub 5 cap for a single unit operation is probably not here for a little while. I think the other piece of the real estate market today is, we're hoping, and we think we're going to see some buying opportunities. We're probably seeing a little bit already, certainly as if you're caught in some sort of debt that is getting ready to mature, then you're going to be looking at a pretty big hit in cash flow if you have to refinance that, if you don't have the equity to sort of just sit around for a while, because where you might have been getting 2-3 points of interest over the last 5 years in your term, or if you have a 10-year term or a CMBS or some sort of life lockout, if that's coming up, you're probably inclined to get rid of that asset, right? Right. And you're probably willing to do it for par value or debt value, and kind of sort of take any equity you have and maybe trade it. So I think that we're going to see some of that. We're seeing a little bit of it. I think we're going to continue to see some of that. We've been pretty bullish in the multifamily market. Historically, we've had a retail, triple net portfolio under the AC Ventures enterprise. David started the business, based upon sale leaseback program with Payless back in the early 90s, built an amazing portfolio of real estate over those years. And what we've seen is that over time, the value appreciation maybe isn't as great as the value appreciation of what we see in the multifamily market. While the barrier to entry might be a little higher, the initial cap rate may be a little lower, the initial return might be a little lower. We think there's favorable financing, in the public markets like Freddie and Fannie over time. That's a good place to be, to preserve equity and to grow your real estate portfolio. So, I think for high quality retail assets, restaurant assets, the market is going to be great, just fine. Other than that, you're going to see a lot of movement. Maybe people go out to other product types like multifamily or even industrial, has had a big push in the last few years just through the, Amazon and sort of online digital marketplace that we see, which will probably continue to grow.
Yeah. It's similar to what I tell people on the restaurant M&A side too. It's like, if you have an asset in a brand, in a geography, the unit economics, if you have an asset that's really, really strong, right, it'll always command a great price and a lot of attention. But otherwise, if you don't, in this kind of market, you're, like you said, there's going to be opportunities to buy probably at a lower price, as interest rates come up and people have to refinance. These are big considerations and big cash flow crunches if we don't see some relief at some point on the interest rate side. What do you see, if I could ask you, what do you see on the food cost side, jumping back into the restaurant business? I mean, how do you think about inflation for the rest of this year and next year? I mean, I'm not asking you to be an economist, but I mean, what are you feeling? Is it going to stagnate and drop in the second half of the year, or is it headed straight up to the moon? I mean, what do you think?
Yeah, I'm definitely not an economist, but I watch CNBC every now and then, and we do have some purview to what we see is happening in our food costs. And I think that inflation will continue to come down. I think we're going to see some better food costs throughout the balance of the year. I mean, we're kind of seeing it a little bit this year. I mean, last year was insane. We were in the 18% range, food cost increases, and labor was at 8%. And so, I think we're a little bit lower than projected in terms of food costs so far this year. When you look at the inflation data, it seems to be slowly, coming down. And so hopefully that'll continue, and we'll see how, the Fed continues to monitor that. I mean, the biggest issue most recently was sort of the banking crisis, right, out west with Silicon Valley Bank, and kind of opened up the eyes of maybe the Fed and how much influence the interest rate hike is having, or how fast it can change the environment, unintended consequences maybe, and so I think that sort of stabilized. I think the banks overall kind of came together and said, okay, the banking sector and the confidence in the banking sector needs to remain. But I do think that, the Fed has to take that into consideration, and how fast they continue to raise interest rates and potentially, flatten and come back down. But I don't know. I mean, I'm really not qualified to be saying any of this. So
yeah, shoot, I've been guessing for years, and it's been wrong the entire time. I did have a good buddy, one of my college buddies, who texts, and he goes, "I got my money out of Silicon Valley Bank like the afternoon that they shut the doors." You know what I mean?
Yeah. We live in the Bay Area. We saw a little bit of contagion there. Some banks that we know, but I think it was stabilized. I think had the federal government not come out on Sunday morning or Sunday evening at 3 p.m. and said, hey, if you have real money in a deposit in a bank, we're going to make sure you get your real money and not just a bank certificate. If that had not happened, I think you would have saw lines of people at banks, particularly starting in the Bay Area because you're just closer to it. But eventually, your neighbors would have been down at, the local credit union, they have some gun racks in there.
Yeah, they got plenty of gun racks.
Saying, let me get my money, because I don't trust you guys. And so, people talk about bailouts and federal government, all that stuff. And this, to me, wasn't a bailout of the bank. And certainly, I think there are some things that are being looked at with that bank and other banks, and they'll have to, you can't bail out, sort of the owners, investors of the bank, but you can certainly make sure that people who had money in there that they've earned, or small businesses, or people that need to make payroll, that money is going to be available to do what they need to do. So, fortunately, I think that sort of stabilizes. It's going to open up some oversight, and smart people like Jamie Dimon and others will figure all that out.
I appreciate your comment about real estate. Maybe there being some opportunities, with interest rates. What do you think the future on the restaurant side looks for you guys at DRG? What does it look like 5 years down the road? What do you think it's going to be?
That's a good question. When I started in 12, 13, when we started putting these companies together, and I was strictly sort of real estate, followed, and I was, kind of, side by side with David and looking at how we're building this restaurant company. Mm-hmm. But strategy was mostly real estate, working with Brandon and Stein and Chris at First Street Development. And then, as we started to get bigger, we knew that we had to get more involved day to day. And I was kind of the short straw to do that. And so I did. And ultimately, after, having a franchisee or two kind of help run the company for us, got sort of far enough along to say, hey, we need to do this ourselves. And I jumped in as the franchisee in 2019. We had outsourced a lot of accounting, we had outsourced HR, we had outsourced a lot of the efforts that maybe you do when you're growing or a small company, but we got to a point where we needed to sort of own it and control what we did. And we learned that from, guys like Joey and Pearson and the Tukala group, and the anglers really helped us quite a bit at Border, and Mark Peterson and Crystal. But
I've always heard that that's somewhere between like the 125 to 150 unit range is where you kind of go from outsourcing everything to kind of starting to bring it in house from an efficiency.
I don't know the magic number, but I do know that, if I knew what I know now, I would probably kind of try to control it from the get-go. But the first thing that I did in 2019 when I took over the paper, and really, led the company 100%, the restaurant company, was we didn't really have a plan. So in January of 2020, we had a restaurant leadership conference in Las Vegas. And I think at the time we had 180 locations or something. And we said, okay, well, what are we going to do by 2024, right? And the plan was we're going to have 3 brands, because we thought that multiple brands would create multiple opportunities for our team. We're going to get to 500 restaurants because we believe scale mattered. And we're going to get to, $700 million of top line revenue, right? Because we believe that revenue is going to drive opportunity. And that I was really, hyped up about that, and got into there in my first meeting and said, here's our goals. Here's what we're going to try to do. Let's go one DRG, one team, one dream. And we all know what happened in February 2020. The lights went off for a few days, and COVID, shut down. And so that became more crisis management and, how are we going to get through essentially what we have, and stabilize that. And then sort of over time, we start to stabilize. We buy something here, we buy something there. We continue to grow. And I'm going to our leadership conference this year, 2023. So almost 4 years, well, I guess, 3 years. And 3 years from that date. And I'm saying, well, okay, well, how are we tracking our 2024 goal?
Mm-hmm.
Well, we don't have 500 restaurants. We have 330. So there's some still time to get there, but we do have 3 brands. I'm going to qualify our 3rd brand as this wine brand that we came up with and branded called Suolovino, that we have 1 location with in Tiburon, California, but we can service the entire country through our wine club. And we're going to build this little brand into a mighty brand. And we have Arby's, we have Taco Bell.
Send that to me. Send that info to me. I'd love to learn something about it. If you're,
I will. Yeah. Obviously, with our, we have a lot of background being from Sonoma, Napa in the wine business. David has had a wine brand for 15. I think 2006 was his first vintage. But and then when we look at our top line goal, by the end of 24, we're going to exceed. But with just organic growth, our goal from 2020. So I was really floored when I looked at these numbers recently, because I didn't expect through everything that we had that we would actually be able to achieve that. We may not get to the 500 stores, but we're going to get to the revenue and the brand projection. And what that means is that we've per store, our AUVs, have grown greater than we hoped. We've built 40 Taco Bells, including, 7 cantinas. We've built almost 8 Arby's since we've had them. And, we continue to grow that top line. So I think it's really about what do we set our goals to, right? And we go into our DRG leadership conference next week. It's called Race to the Top. We have F1 coming to Las Vegas in November. So we're sort of honoring that and leaning into it and saying, how do we get, to our goals, and how do we essentially, look to double in our revenue, double in size and create more opportunities. And we look at F1 of being a place where there's a lot of teamwork done. It's not unlike, being in the restaurant business where you need all these people to be able to do something that leads to the end product. And so we're really kind of going after that and going to set some goals next week on where we're going to land in 2028, being that we're going to hit these intentions that we made in 2020. And, I just think that those things are important, intentions and what you're setting out to do is important to put out in front of you.
I love it. You've done an amazing job. It's a really cool story, taking over as president and franchisee in 2019 from the background that you had. Not easy, not growing up in the restaurant business to do what you've done, really. And I got to ask a couple of quick fire questions because we got like 2 or 3 minutes left here. Number one, 30 seconds or so. Would you consider investing in non-restaurant franchises? And what would turn you to it, if so?
Yes. I mean, just similar intrinsics, good brand, good franchisor. And yeah, I mean, there's other products out there that I'm sure would qualify.
There's kind of very little cross-pollination. We all in the industry would have thought it would have been more of cross-pollination by now, but it hasn't really happened in huge quantities.
There's some folks that do some good job at it. I mean, I think Tom Cook and Pacific Bells comes to mind. He's got some fitness. He's got some other brands, and he's done a really good job at diversification from the restaurant business. We've invested in other restaurants, like we're invested with Michael Mina, who is a really great, amazing chef.
Yeah, right. Great restaurants in New York. I mean, in all over, really, Las Vegas. So
it's really good to see what he's doing, and so it's really led to a lot of interesting opportunities for us.
I bet. Here's another question for you: how much you sleeping these days?
I sleep a lot. I mean,
you do okay?
Yeah,
I mean, you probably got 11 or 12,000 people working for you. I mean, it's got to be a tough job.
Yeah, but look, I have eight Golden Bell winners. I mean, I have, and then you have 8 Golden Bell winners because you have 50 amazing area coaches, and you've got amazing directors and great leaders, and I'm sort of like, I'm trying to learn from some of the great leaders and CEOs out there. That's really about, putting the right people in place and allowing them to do their best job and giving them the avenue to and being there for them with the questions that they need. I was reading on the flight out here a quote or a little back page of Ron Howard. You remember Opie? Yeah. You remind me of Opie. You were probably like Opie as a kid. I could see you running down to the creek with your fishing pole.
Maybe.
Yeah,
didn't have enough money for a fishing pole. I just had a stick like you did.
Well, that's what he had. That's what he had. But he talked about, as he became a director, and I'll try to paraphrase it. He, he would do a shoot, and oftentimes an actor or a cinematographer or a sound person would come in and want to do it a little bit differently. And he would ask himself, okay, does the way they want to do it change, the intent of the shot that he's trying to create? Yeah. And if the answer was yes, it changes what he wanted, that he would just say, okay, well, this is not what we want, so let's not do it. But most of the time, and if it wasn't going to change what he wanted, then he would just, okay, let's do it that way. It sounds great. But most of the time, it was his rule called 6-1, right? And we've all heard 6-1. It's 6-1, half a dozen the other. Like, if their idea is different than my idea, if I was doing it, I would do it this way. They're going to do it, and they want to do it this way. It's probably going to be the same. So let's support the way they want to do it because they're executing it, right? And they're going to, and often, he said, more times than not, the shoe would come out better because it's their idea. It's their execution of what they want. They're going to put more passion into it than your idea. And so that I thought about that, and I think that's a lot of the way that our company works from the top throughout, all of our leaders is we respect what, our team members and our executives want to do. And if it's a little bit different than we would do it, but it's 6 1 half does the other, we say, go do it your way and let's see the results. And, we can see them and where we're at today at the Golden Bell.
Yay, that's wonderful. Enjoy Hawaii. I'll say that my favorite Taco Bell product has always been the double-decker taco. I can eat that thing until my face turns green. What about you? Last question. What's your favorite Taco Bell menu product? And then we'll end with that.
Well, it's different than the question that you had earlier, which was if I was in a desert island.
Yeah, right.
With my Taco Bell.
That's actually what I asked. If you're on a desert island.
I'm going to ask that. Yeah. First of all, if I was on a desert island, I want this kikuya nut, which is the Hawaiian nut that has, if you break it open in the inside, it burns, right? And the Hawaiians used to use it for guidance, and now they use it for enlightenment and guidance. And so if I was in a desert island, I hope there's a lot of kikuya nuts. And if I could have anything at Taco Bell, it would be the grilled cheese, steak burrito. Yeah. Because I'd be on a desert island, I'd be very hungry, and that's a very filling and delicious product. Yes. But it's also if you get the spice one, it can be pretty spicy, so I need something to wash it down with. Yeah. And so I'd probably get one of our Baja Blast twisted freezes from our cantina, big yard of it, and a grilled cheese burrito, twisted freeze. And I'd be in heaven on the desert island.
What else would you need?
I'm looking for that desert island.
Yeah, right. And no internet service, right? So,
exactly.
SG, it's been an honor and a pleasure. Thank you it's been real insightful. I know everyone's enjoyed it and will enjoy it. For those of you, who tuned in, thank you for doing so. We'll come back with another webinar in a couple of months. I'm noodling on what it'll be, but we may go into legal challenges and negotiating M&A transactions. That's kind of on my mind right now, and that'll be a pretty informative one. But thank you so much, SG. Blessings to you. I hope you guys continue to kick butt in your businesses, and thanks so much for everything.
All right, thanks, Rick. Fun being here.
Great seeing you, man. Take care.
Bye-bye.
All right, bye-bye now.